Well, tax cuts likely to provide a boost to growth in the new year. On the other hand, inflation and labor market risks are still hanging around. Joining us now on what we can expect for the economy in 2026, Daniel Hornung. He's former deputy director of the National Economic Council under President Biden, and Doug Holtz-Eakin. He is American Action Forum president. Welcome to you both. So Doug, let's start with that setup. I mean, we have some tailwinds for demand, both on the consumer side through the tax policies as well as this corporate investment boom. I guess the question is, are we going to still see this disconnect between GDP and job growth as an initial question?
Yeah, that's a big mystery right now. The third quarter is all productivity. The labor input is flat. We haven't seen any growth in hours, and the top line numbers are real big. So I don't see how that continues, to be honest. One of the things that hasn't been discussed as much about that report is the growth of real disposable income was zero. And so I don't see how we continue to get the consumer spending that we saw in the third quarter report through the fourth quarter and into next year. So I expect things to flatten out, quite frankly, in the fourth quarter. And then you're right, early next year we'll start to see the refund season, a lot of cash into the household sector, cash into the small business sector, which is really struggling as well. And I see, the second half of 2026 is going to be pretty strong. But between now and then, it's going to slow down a bit.
And then, Daniel, on the inflation side, on one hand, inflation readings have been somewhat stubborn, a little closer to 3% than 2%. On the other, that's not that out of whack with the long-term history of how inflation runs. And markets themselves have shown very little concern about a longer-term inflation problem. So how do you think that plays next year?
Well, I think where we were at this time last year was forecasters broadly thought inflation was going to go back to around 2% by this point. Instead, I think when we get the data that's delayed due to the shutdown, we'll see it's, as you noted, probably closer to 3%. And the main reason for that is the tariff and good inflation issue. I think, again, forecasters looking at inflation to come down back to around 2% over the course of this year. My sense is that both because of the kind of delay of some tariff pass through and because I think we're likely to see a continued kind of jumping around in that average effective tariff rate with litigation and the administration trying to build back that tariff wall, I think we might see a slower move to 2% than some are forecasting. But, I think the direction of travel clearly is lower on inflation. And we could, over the course of this year, see both, I think, the American public, but the Federal Reserve, too, become more focused on some of what Doug was getting at, things like slowing real income growth and then, of course, unemployment and the like.
What would that look like, Doug, in terms of getting more focused on that? I mean, obviously, for the Fed, it would be a further easing bias, but are there levers to be pulled on the fiscal side?
Well, I think they've pulled the levers on the fiscal side, quite frankly, and what they ought to be thinking about is putting in place something that's more stable over the long term. As you know, we have enormous budget deficits, things that are 6% of GDP at full employment. It's really unwise and something that they're going to have to take care of. And we have a looming bankruptcy in Social Security, so there's a real reason to move on one of the big entitlement programs. So they ought to start, getting ready to take care of the fiscal outlook. That's the right thing to do for both the economy and for the budget. I think the spring's going to be a tough patch, to be honest. I'm less optimistic than others on the inflation coming down to 2 quickly. It's been pretty stubborn and was really headed north, not south, at the end of this year. So the Fed's not going to have a big easing bias, and we're going to have a slowing economy, and it's going to be a sort of stagflation feel early in the year. That's never a good thing in an election year. So I'm a little worried about what the spring looks like.